We're also tracking your year-end finances this morning, and it's certainly been a difficult year for many Canadians with their finances. But will the new year be any different? There are changes coming in the form of taxes, payments, and deductions. And Scott Peterson is here with the laundry list. I've got the pen, so list off the changes for us.
Yeah, there's going to be a lot of benefits to lower-income Canadians, seniors, for example. So a lot of things are rolling out this year. So I'll get right to this laundry list because it's extensive as far as it always is, what's going to happen in the new year. Starting with tax brackets, they are increasing, and that's a good thing. A 15% minimum tax now will apply to $57,375 of income, so that's going up. That's about $1,500 year over year. That means we're paying less taxes. The tax rate does not change on this. Unemployment insurance as well, deductions on pay stubs. They're going down 2 cents to $1.64 on $100 of insurable earnings. Doesn't sound like a huge amount, but according to a lot of taxpayers, it's good. It's going in the right direction. The new Canada Disability Benefits payment will start in July. That's $200 per month for working-age Canadians with disabilities, and that's expected to help about 600,000 Canadians across the country. Those not currently covered by dental insurance will be covered if eligible, as well as more extensive dental coverage as well. And for seniors, CPP and OAS payments will remain the same for those that are eligible. The OAS payments should be reviewed in March, and that's potentially good news out there for a lot of seniors that say they could use the help. And on the bad side of the ledger, Chris, we've got the GST holiday. That's ending on February 15th. Canadians are currently saving anywhere between 5 and 15%, depending on where they are in the country. And also food. We've talked about this one. Despite cooling inflation and cooling food costs, we have food expected to go up next year between 3 and 5%. That's according to a food price report by Dalhousie University. A family of 4 expected to pay about $800 more for the same basket of goods. One of the main culprits here is the low Canadian dollar, so we're getting less buying power, whether we like it or not. But some, changes coming starting tomorrow.
Okay. And I'm always learning business terms from you. You said something last hour, Santa Claus rally. Is that something you coined, or is that something that happens every year?
That's something, well, it's supposed to happen every year. Since 1950, 80% of the time. That means the days after Christmas to the New Year, that they're to the upside. They have not been to the upside this year, nor were they last year as well. So a little bit of a Grinch sell-off, you could say. And a lot of year-end pricing, a lot of people are selling their positions. So let's take a look at these markets because, unfortunately, they're not a Santa Claus rally this year. We've got European markets that are somewhat closed. We've got shortened days in London and Paris. Markets are closed in Italy, Germany, and Switzerland. 71.56 for a barrel of oil. We have the Canadian dollar still doing nothing against the U.S. counterpart, seeking lows that we haven't seen in about 20 years. And let's get right to the rest of the markets. We're seeing a little bit of a change from negative last time I was out here to a little bit of a positive. So maybe Santa's still hanging around. We have the S&P, the Dow, NASDAQ.
It's not too late to rally.
Never too late to rally.
All right. Thank you, Scott.
Thanks, Chris.